So I wanted to go over my trades for this week. So I've got a net profit, or a gross profit, I mean, of $104 US this week. But sadly, I've got about $537 of losses. So if it weren't for those losses, I would have had about 641 gross profit. Now, these losses here, they come from put spreads that I had on Fastly and LVGO, which obviously right now I regret doing them, because I basically did them because they had earnings, so volatility was high, but I don't even know what these stocks are. I just picked them for volatility and I paid the price for it. The sad part is my put spread that got tested, they were tested completely. I had a put spread on Fastly, for example, at 85, and Fastly dropped to, I think, in the 70s. So I sold a call spread against it to reduce max loss. And what ended up happening now is the stock went above 85 just yesterday. So now the call spread is what made me lose. And same thing on the LVGO. I had a 120 put spread. It got completely breached. I think it went to 112. So I sold a call spread at the 120 strike. And now LVGO is trading at above 140. So once again, the call spread that I use for mitigation ends up being the one that cost me money. So if I had just held on to the put spread and didn't do any management, they would have ended up winners at expiration. So that's what's kind of annoying. So I would have had, instead of all these losing amounts, they would have been an extra maybe $80 profit. So regardless, it's over, it's done. So I've got these trades here, TWLO, that I was able to close this week. It was also an earnings trade that I opened at the same time as the others, but I was able to close for a profit of about $82. I've got my regular SPY put spreads that I open every Monday, Wednesday, Friday. So the one I opened on Monday is over here. I ended up closing it for 24 cents. So open for 56, closed for 24 cents, did 2 contracts, so $64 profit. And I've got another one here that was open on Friday, August 14. I opened it for 58 cents, was able to close it on Monday for 15 cents. So in one day, just going over the weekend, I was able to go from 58 cents to 15 cents, giving me an $86 profit. And then I did mostly, so basically I only had SPY and NVIDIA that were trades that I opened this week. I missed out on a lot of trades, I'll go through them. But NVIDIA was an earnings trade. I opened one on Monday. NVIDIA had earnings Wednesday after market hours. So I sold a call, a naked call. So the risk is unlimited when you sell a naked call. But I sold it at 600 when NVIDIA was trading at 580, 585. So in theory, it's very far, but obviously in practice, anything can happen. But regardless, so I sold it for 63 cents. I did 2 contracts, so that's $126. And right now, NVIDIA, if we look at it, is trading at 509. So it flew today, actually, but still 90 points away from my strike of 600. And we've got 2 hours and a half to go. So I could actually close the NVIDIA trade. So if I go to my positions, you can see that it's trading for a penny. So if I want, I can close it for a penny. But I kind of want to avoid commissions. Plus, I've got 9 contracts because I've got a 600 call and a 615 call. So if I go back to my spreadsheet, you can see that I sold the 615 call as well. I did 7 contracts and I sold it for 27 cents, collecting $189. So I could have actually done more contracts at 600 and collected more, but I just wanted to play it safe or safer. So if I buy it back, I'm going to spend about $9 just to pay for that 1 cent times 9 contracts, plus commission of $5 plus 75 cents per contract. So 75 cents times 9. So let's say an extra $7. So 7 plus 9 plus 5. That's how much I would spend to buy it back and close it. But I mean, there's 2 hours to go and NVIDIA is 90 points away from my strike. Most likely it's going to expire worthless and I don't have to pay back. I don't have to pay for commissions. Plus, it's not like I need the capital to place another trade. I'm not going to place a trade right now. So I might as well just let it expire worthless. This NVIDIA call took about, I think, $5,000 of capital just to place the trade. It's not the risk. It's not the amount that I can lose. It's the amount required to be able to place the trade. Because the risk that the amount that I can lose is unlimited. It's unknown. NVIDIA can go to 700. I would lose $100 times the number of contracts. So in theory, the risk is unlimited. And the 615, I think, took about $13,000 of capital to open this trade. But I didn't mind because I'm super far away, so I consider it a very safe trade. Although anything's possible, but in practical terms, it's still very safe. Now, there were a lot of earnings this week that I missed out on. I thought about placing a trade and I didn't. Alibaba, for example, I was going to sell a naked put. I didn't. Walmart, I was going to do a strangle on it. I didn't. Home Depot, I was going to sell a naked put on it. I didn't. PDD, I was going to sell a naked call and I didn't. And they would have all been winners. So I could have easily made an extra $500 if I just wasn't so pessimistic. Target after earnings went up a lot. I was going to sell a naked call after earnings was announced. So it was trading at 152, 153. I was trying to sell a naked call at a 170 strike for this week because it had already went up after earnings. What are the odds that it goes up even more and reach 170 by Friday? And I was going to collect about $200 on that trade. I was trying to get the best price possible because Target was still going up. It had opened at around 149 and started going up to 150, 151, 152. So, and then I saw it at 154 and I don't know if it's going to continue going higher. So I was trying to get the best price out of the 170 calls. I didn't get it. The stock started to drop. Time is going by. So the value of the premiums dropped. So I didn't get the fill that I wanted. And then I didn't feel like collecting less than what I could have collected. So I just didn't do the trade. But definitely another missed opportunity there. So it could have been a much better week if I don't consider the losses and if I actually took on some more trades that I just thought about but didn't do. So next week, there's a lot of earnings. We've got Salesforce. I'll try to play something on Salesforce. We've got Intuit. We've got Autodesk, Workday, Dollar General, Best Buy, Dollar Tree, and Ulta Beauty. I might try to do maybe a naked call on Ulta Beauty. We'll see. I don't think it's going to jump up after earnings. We'll see if I can go far enough to make the trade safe. So these are some potential trades. Other potential trades for next week. If we look at Nvidia for next week, you could see that if I click on all strikes here, you could see that the 600 call, the 600 strike, is also paying some decent premiums. Sorry, so this is August 21st. Let's choose August 28th expiry. So you can see the 600 strike, I can get 70 cents for it. And let's see what is the capital required for this. So if I click on 75 cents, sell, it's about $3,000 of capital requirement to open this trade. I make that money, I keep the premium as long as Nvidia stays below 600 by next Friday. So if I think Nvidia stays below 600 by next Friday, I can make this trade. And let's say I want to make it safer, I could go further, right? I can go to maybe 620. I'll collect a little bit less, but the spread between the bid and the ask is too far. And I don't like it when that's the case. So see, this one's better, 610, 51, and 55. It's closer. Let's see what the capital requirement is. It's 2,400, so it's a much lower capital requirement. So this could be a good trade, but I don't feel comfortable going through the weekend because sometimes a lot of crazy things can happen over the weekend. Monday opens pretty high or pretty low. So I'd rather wait on Monday morning. So Monday open, place a trade for the same week Friday. But these are potential trades that I can make. Same thing on Apple. If we look up Apple, if we look up the expiry of August 28th, click calls, click all strikes, and let's go to 600 as well, or even further, as far as we can go, as long as we can collect some decent premiums. So maybe 620 call, we can collect about 30 cents. 610, we can collect 35 cents. Let's see what the capital requirement is for this trade. So it's about 2,300 capital requirement. So the risk with this is unlimited. If Apple goes to 700, I have to pay $120. Or if I'm taking a 620 strike or 610, then I have to pay $90 times the number of contracts. But I mean, what are the chances this happens, right? So that's the risk. Now, if things go as expected, then my profit is the premium that I'm collecting. So it's small amount of premiums, but with a very high chance of success. Apple sure does look like it's going to go up. It went up today almost 20 points. So let's say it goes up 20 points every day, which is unlikely. If it goes up, it's not going to go up 20 points every day consecutively. It'll go up maybe 20 points one day, drop maybe 5 the next, and then back up again 15. It'll go up gradually. So as long as it stays below 600 or 610, then this trade could be a good trade. But I don't want to place it through the weekend, so I'd rather wait till Monday. But yeah, potential trades I'm looking at. Spotify as well. Premiums aren't as juicy as Nvidia and Apple, but definitely something to look into. Maybe spread out my trades also. So if I look at, let's see how far I can go. We can go to maybe 317.5, 320, 325, maybe 320 strike, collect 50 cents. Let's see what the capital requirement is for this trade. it'll be about $3,000 of capital requirement. So I've got about $23,000 of capital or maintenance excess that I can use to place trades. But when Nvidia, hopefully when Nvidia expires worthless, a lot of that capital requirement will be released, and I'll have more buying power, because then I'll just be left with 2 SPY put spreads, which take up about 800 capital requirement for each. I also want to start placing trades in my TFSA. I mean, I've got the capital, but I'm not using it. It's all empty. I've got no positions in my TFSA. There's nothing. So I want to place maybe some covered call trades in my TFSA, some in the money covered call trades, so it acts a bit as a naked put. For example, if I even look at Apple, for example, if I could probably do one contract, probably not even. I can't even do one contract of Apple. Let's look at a different stock. Let's look at Spotify, for example. I could, if I decide to do a cover call trade on Spotify for next week, it's at 273. I could go at a 265 strike. I'll pay about 262. So my max profit is $3. It's the difference between 265 and 262, as long as Spotify stays above 265. So it kind of acts like a naked put, but in your TFSA. I can go further. I could go lower to make the trade safer or a higher chance of winning in case Spotify drops. So if I go with the 250 strike, yeah, I'm collecting maybe not even $1. So if I go with 255, yeah, my max profit would be 255 minus how much I pay for this covered call trade. So about maybe 253.8 about. So about $1.20. That's if I place it right now for next week, but I'd rather place it on Monday morning just to avoid the weekend craziness. Because I noticed that the biggest movement usually happens over the weekend. So if I use the capital in my TFSA, my buying power in my margin account will be different. So I'd rather use the TFSA first, see what do I have left of buying power in my margin, and then place my trades in my margin account. Although my margin account trades are probably trades with higher success. I could also maybe do a SPY covered call trade in my TFSA. It's going to require about $33,000 capital, so I could do that. But the problem is the risk of the market dropping. And we saw that yesterday. SPY went from 339 to 335, but then recovered it so quickly, which is hilarious. But who knows if it's going to recover every time. So let's say I go to August 28th, cover call trade. So for next Friday, I could go with a 335 strike, pay only 333.4. So that's a profit of about $1.50 or $150 with as long as SPY stays above 335 by next Friday. So it's not that far away. I mean, it's not that safe. I mean, SPY could drop to 330 by next Friday. It's very doable. So if we look at stocks with high IV, if I click on option here, implied volatility rankings, market cap over 10 billion, IV over 70%, and let's sort by IV rank. You could see that we've got SLV, silver, Apple. So Apple is something that's definitely worth selling premiums on. Its IVR is 86%. We've got gold, Adobe, DocuSign, Dollar Tree, Baba, Ulta. So yeah, so these are maybe potential underlyings on which I could sell premiums on, but it'll depend on the scenario. For example, if I look at today, what dropped hard or what moved up a lot, you can see that PDD dropped 12%. So maybe a naked put on PDD would be a good idea for next Friday. So let's look at PDD because it took a nice drop today. Maybe a bounce back is expected. So if we look at, but these are all assumptions, but at least I'm giving myself room by selling an out of the money naked put. The stock can still drop a bit. I've got room to be wrong and I can still make money. So let's say I go with, let's go further. It's not far enough, 82.5. So for next Friday, maybe the 78 strike, collect 50 cents. Let's see what the capital required is for this trade. So it's about $3,000 of capital required for this trade for only $58. Might not be that worth it. PDD is a stock that's very volatile. It can move a lot, so maybe not that safe of a trade. Now let's see what went up a lot. So today we've got John Deere, we've got Nvidia, we've got Alta, Tesla, all stocks that went up a lot. Let's look at Tesla just for fun. I'm not going to do anything on Tesla because capital requirement on Tesla is a lot and Tesla moves like crazy. So let's just see the premiums, what they're priced at, because you can see that it's got high implied volatility. So let's look at August 28th. Let's look at the call side, see how much premium is available. Click all strikes. You can see the 3,500 strike. So if you know for sure that Tesla does not go above 3,500 by next Friday, you can make $90 easy. You can make $1 if you think 3,400 is safe. You can make $300 if you think $3,000 is safe. Right now, Tesla's at 2086. It's got a high of 2092. Can Tesla move up 1,000 points in 1 week? Let's just see what the capital requirement is for the $3,000 strike. It's about $20,000. So I can afford it right now. As you can see, it's not telling me not enough buying power. It'll take up $20,000 of my buying power, but I'll make $300 with an almost guaranteed. Is it guaranteed? I'm not sure. Tesla is crazy, but in normal situations, it is almost guaranteed. Let's see if we do the 2,500, you'll see that the buying power increases, but I'll get $1,500 for if I sell that call option. And you see, I don't have enough buying power for that because it's requiring $30,000 of capital. Now, let's say we go even further, which is the 3,500, collect $90. So not that much, but very, very safe. 3,500 strike by next Friday, impossible. If it does happen, then you deserve to lose because it's really not your fault. It's also requiring 20,000. So for the same capital requirement, might as well get closer. Makes a trade less safe, but you can get $300. I'm not doing it, but it's definitely nice to know what's possible out there. Yeah, so very little profit this week, and surely after commissions, it's not going to be that much. But at least it wasn't a losing week, and at least I can pinpoint the mistakes that I made. I'm not going to place trades on stocks that I don't even know or don't have expected behavior. So I'll avoid that next time. And I'll stick to the stocks that I like, that I know. Maybe place more trades, stop being a chicken and just placing a bit more trades, and we'll see what happens next week. So if you have any questions, leave in the comment section below. And like always, if you're going to open an account with Questrade to trade on the stock market, use my referral link below to get $50 in free trades. If you enjoyed this video, click the like button, share with a friend, and subscribe to the channel. Thanks for watching.